Hello, I'm super excited to welcome you all back to CryptoCast. In today's episode, we are diving deep into one of crypto and Web3's hottest topics right now, mergers and acquisitions, or M&A for short. To help unpack what is really happening in the market, I'm joined by one of the sector's key voices, Karl-Martin Ahrend, who is the founding partner of Arita. Hi, Karl.
Hey, Kathryn. Thanks for having me.
Absolute pleasure. So, a little bit of background about Arita for those who don't know. Arita is a leading investment bank focused exclusively on Web3 and crypto. They advise startups, DAOs, large ecosystem players, and institutional investors. The team has worked on some of the most significant deals in the space, including Kraken's acquisition of Breakout. With M&A activity accelerating rapidly across the sector, there really couldn't be a better time to explore the latest trends with Karl. Welcome again, Karl. I really couldn't think of a better person to be discussing crypto M&A with today.
Awesome, looking forward.
So, let's start with your journey, Karl. How did you find your way into crypto and ultimately go on to found Arita?
Yeah, look, I think it's pretty similar to a lot of people that sort of have joined the space from a more traditional setup, even back in the days. So my friends that had already made the jump referred to it as a famous crypto rabbit hole, and I do use that jargon every now and then when I see friends moving over from let's say traditional finance organizations, or also law firms are a good example of people going down that crypto rabbit hole, and I think it all starts with a personal passion and excitement, interest, to say the very least, in the space. And it was similar for myself, and I include my co-founders here as well. So that I want to say early in the last cycle, 2020, got pulled into the space more from a personal perspective. Obviously, played around on chain, made a lot of mistakes, a lot of learnings, but surely and slowly had learned to love the space for sort of the numbers that are being moved in what from the outside seem to be a somewhat obscure or niche market. But when you spend more time, or already back then, when you spend more time in it, you realize, okay, there's actually something happening here. And I think the more we went down that crypto rabbit hole, also going to conferences, really meeting people, really the quality of the people and the talent that was really gravitating towards the crypto ecosystem was outstanding. And that, I think, ultimately pushed me to really think twice about my future career and sort of which direction I wanted to take it. And ultimately got us to found Areta in 2022. Me, a co-founder, sort of had worked together at the Blackstone Group in the private equity team for a bit more than 5 years together already, and sort of had developed this joint passion for the crypto space. And the more and more time we spend with founders, teams, projects, but also more broadly ecosystem participants, I think there were a couple of dynamics that really stood out to us, or that we didn't expect. Let's put it that way. I think one was clearly that while the number of or the space had grown quite massively in terms of numbers, so assets like market cap, whatever, it had still been quite small in terms of people, right? The amount of, or the number of people really driving the space, what we call sort of the epicenter of the space, has stayed relatively small. I mean, even today is sort of a 15-year-old, 20-year-old space, right? So a lot of the initial really contributors, founders, are still around and are sort of now in the mid phases of their career. So we saw a chance to really, within our careers and our lifetimes, get really close to the epicenter, and probably quite early on in the journey of Arita. And sort of this, it's not, let's say, obviously a general trajectory if you were looking at more traditional and well-established segments like the healthcare sector or something like that, right? So here we really thought we could make it to the epicenter. Two, and this is obviously massively changing now, and it's a great development we love seeing, is the amount of people with really traditional backgrounds that have already built a career or spent a significant amount of time in the crypto space had been very limited at the time. It is still limited today, and you and I are great examples for that. And sort of we obviously try to spread the excitement within our previous firms and within our previous friend circles. But it still does take, I think, a huge conviction and significant commitment for people to, let's say, move more closely to the digital asset ecosystem. And so we thought that people with our background in sort of JP Morgan, Deutsche Bank, Blackstone in my case, and so you exchange a couple of logos for my co-founders and also early team members. We thought that this, let's say, quality would certainly be additive to the crypto space. Back in the time, even today, there is not a lot of financial advisors that specialize on really digital asset native problems and situations. And so we thought that bringing those institutional grade financial services to founders and teams that so far haven't been used to that, would just massively elevate the quality of the entire ecosystem by itself. And so that conviction, I think, ultimately, was sort of the tipping point. And then on a personal level, quite frankly, and this is not something we could change, right? But we were young enough to know that we can take a 20, 30-year view with our next career step, right? And building a financial services firm that's primarily experience and trust-based is obviously not something that, you expect to be exploding in the first year or not the second, and likely not even the 10th year. But really, once you've established your market position, you've established trust with the key market participants, with clients over time, then maybe in year 20, 30, when you sort of, we always refer to it, when you actually run a gray hair business with gray hair, then, Areta will actually flourish. Now, I think we've fast-tracked that vision or journey by a good margin, just given the trajectory we're on. But these were sort of if you looked at it as a Venn diagram, the three dimensions we were sort of assessing the opportunity by, and ultimately us sitting in the middle of that Venn diagram thought that it would be an interesting and well-needed business to establish, and that it should accrue a lot of value sort of in the decades to come. Long-winded intro. I think in summary, it's really a deep passion and excitement for the crypto space, and it was our way, as finance nerds, to add as much value to a growing ecosystem with significant tailwinds. And here we go. That's Arita.
Yeah, thank you very much, Karl. And that passion really shines through, and also your experience in traditional sector, as you say, is another thing that really shines through in all your content and working with you guys. And also, it's very timely for the nature of where the industry is moving right now. Like everyone's talking about institutional DeFi and also M&A on a larger scale. So it's definitely good that you've had the vision early on to recognize that.
Totally.
So I guess we can move into M&A, which is what we're going to be talking about for the majority of this podcast. So from your vantage point, what types of crypto or Web3 companies are the most attractive acquisition targets right now, and what is driving that demand?
Yeah, so it's interesting. And obviously also us being the most active sell-side advisor for the space, having done more than 15 deals alone this year, and leading by deal count. We work in, I would say, most subsectors of the crypto space, but really the one that's been driving M&A volume and also deals have obviously been trading infrastructure. That's where we have all of the more established crypto companies. So think of your large international crypto exchanges expanding either geographically or product-wise. That's the key theme, and I think the most plug-and-play transaction as we look at the digital asset ecosystem today. the second bucket this year certainly was payments. Payments was interesting not only from a crypto incumbent perspective, but also from the large payment providers or payment companies that have, found themselves in a buy versus build decision to either massively invest and grow in a team internally to step up their game and stablecoin payment rails, on-chain payment orchestration, or acquire a team that has already successfully built a market leader in that position or in that vertical. So these were certainly the two outstanding verticals in terms of volume and also headlines that everyone refers to. I think for these other sub-verticals, there is different dimensions or dynamics at play within each and every one of them. Typically, consolidation is sort of the driver for M&A. And if you look at the crypto, I guess, history or just the first decade, let's say, of the crypto economy, I mean, it's been like the ethos is obviously decentralization and having multiple different parties potentially doing the same thing versus having one centralized party emerge that runs the entire space, right? So by definition, it has been built quite decentralized. And another layer on top of that, if you then move a bit more to the on-chain space, is even put on that ethos a gazillion of different ecosystems that essentially deliver somewhat of the same service or customer experience within each ecosystem. The applications essentially being just the same across different ecosystems. So on top of it, already decentralized ethos and I think way to set up an ecosystem, you add or you basically extrapolate that by each ecosystem again trying to build every single application for their own ecosystem with teams, etc. So what we ended up with, I think, after the last cycle is just a completely multifaceted crypto space, none of which had enough traction or gravity effects to really make a case for their own, let's say, destiny or survival. And so you had this couple of winners emerge that found themselves in a very attractive situation and sort of with an ability to consolidate really as the market leader and emerge as sort of the one strong, outstanding party in the space. And I think that's what's starting to happen, certainly with the Coinbases, the Krakens, the large exchanges of the world, becoming the market leaders and driving that consolidation. And you see early signs of that also in the more mature subsegments, right? So, and some of them need that also, whether it's staking, whether it's custody, whether it's data. So all of these are also interesting verticals, but really the standout headline segments have been trading, infrastructure, and payments.
Yeah, it's really interesting. And if you're a bigger company in the space or even a larger company outside of the Web3 ecosystem, it's a lot easier to acquire a company that's already doing what you want rather than build it yourself, isn't it? I mean, you can do an M&A transaction in 3 months, sometimes even quicker. Rather than building a project from scratch, which, as you know, from building Arita, obviously that takes a lot longer than 3 months, doesn't it?
Totally. And I think more than the product itself, which maybe that, obviously the large organizations out there have the financial resources, probably also, the setup to innovate and the drive, but finding the people in a decade-old industry with, let's say, 3 to 4 years of experience doing exactly one niche use case or ideating around it, iterating on it, and really finding product market fit. That's the scarcity, right? And so I think a lot of deals that we're seeing are also driven by people wanting to acquire the personas, the team, the quality of the founders and broader management teams, and get those into their own ship and really start steering the ship together versus somebody else potentially teaming up with them, right? And so that's also, I think, a lot of what's happened. And I think is a common phenomenon that's not, let's say, restricted to the crypto space, that especially in the early innings, innovation and speed of basically developers or management teams shipping is much faster in a startup environment than it would be in a multi-billion-dollar organization, right? So, even for them, it does make sense to see basically who of the startups they're out there makes the race, emerges as sort of a leader, and then only tap into it via an M&A transaction versus trying to build it all in-house. If you ask me, actually, I do think there is too many people with an in-house agenda, and more often than not, we know how these end up. And so I do foresee a lot more M&A also from the traditional peers as they now also with the regulatory tailwinds, obviously have the ability, but I think also increasingly the appetite to play an active role in the ecosystem.
Yeah, it's a good way of getting diversity and a different perspective in as well, isn't it?
Totally.
For sure. So moving on to negotiation trends. So when you're actually sitting across the table on deals today, what are the biggest friction points you are seeing in terms of negotiation?
Yeah, and I think that's why also people like us or Arita has been obviously benefiting from that dynamic, and sort of we try to cure that current, I guess, mismatch of buy side versus sell side. I mean, we briefly talked about it, right? But if you look at the buy side today, it's very rarely a traditional company that tries to enter the crypto space, with the exception of maybe payments. I don't think we see a lot of more traditional, multi-billion-dollar businesses necessarily trying to acquire crypto businesses. So the typical sell-side M&A founder is left with speaking to the 50, 100, 150 large crypto companies that we have that also play in their, let's say, relevant segment. And out of those, maybe only a handful or so would even be currently interested in doing acquisitions or having the team to support an acquisition at the time, right? And so a lot of things need to go right to find really the perfect buyer in a crypto space. So where if I just think about my Blackstone days, right? If you had a good asset out there and you had a financial sponsor universe that you could tap into, being the Blackstones of the world, you could literally access 100, 200 funds, and you would know, well, at a certain price, maybe half of it, a third of it, maybe a quarter of it would buy the asset, right, or buy the business. And so you're left with a completely different negotiation position than in crypto today, where almost your best shot is finding this one company, maybe 2 or 3 that would like to acquire you, integrate you, and offer you also, I think, a better future in the combined world where this is a standalone case. And that's tricky, right? And I think we do see a lot of the corporate development teams, larger crypto exchanges businesses, realizing that opportunity and being aggressive on the way that they do acquisitions, right? They know, okay, there's likely only a handful of other people around me that could be doing this transaction, and it's not going to be the right fit, not the right geography, not the right timing for probably a majority of them. And so I have quite some negotiation power in these conversations, and that's why I think an advisor on the sell side is extremely important to be rooting these off and try to forego, let's say, a low-balling situation, which, depending on your own situation, you may not be necessarily in the best position to negotiate away from. Plus, what we see is, and I mean, this I guess everyone will understand, right? Most of the deals are dependent on founders, continuing to work in a new business, oftentimes tied to earnouts, performance-based or just time-based. And so imagine a world where your future career, your future earnings, salaries depend massively on the basically person that you're currently trying to negotiate with, right? and that's sitting on the other table. I mean, you can see how that is inherently a tricky thing to do, right? You don't want to be too aggressive because you're dependent on that person, assuming you will be acquired by them. You don't want to be too nice, because then, obviously you're missing out on potential upside, and your investors potentially as well. And so I think having someone intermediate that conversation and having the ability to play a bit good cop, bad cop, I think we've proven, we've seen, is optimizing the case or the outcome of the process for the sell side quite massively. Also, where in a lot of instances there's multiple competitors within one subsegment for sale at the same time, and it gets tricky. But what I'm saying, I think, is that the buy side in crypto today, or in the digital asset ecosystem, has a much better negotiation position, and it needs to be addressed with basically any measure possible. I do think having a sell-side advisor intermediate those conversations, whoever it is a good place to start, and I can only recommend. And then, then I'm sure a lot of these podcasts, and Kathryn, you would be an absolute expert in also negotiating the fine print of any deal documents. So I'm maybe not the right point to go into too much detail here.
Yeah, it's funny actually, because what you mentioned, price is obviously one of the biggest things that gets negotiated, and I think from the sell side perspective, it's obviously your baby, and they want as much as possible, obviously, for the company. But I feel like what you're saying, the buyers are in a lot better negotiation position. So often they have to compromise on the price ultimately if they want to sell. We are seeing that a lot. Another thing that I'm seeing a lot is, as you mentioned, earnouts. A lot of the consideration might not be upfront cash consideration. It might be, for example, shares or tokens in the buyer. And a point that I really stress on this is obviously that the sell side need to make sure that they're doing their due diligence on the buyer, because it's just as important, really.
Totally. Yeah. Look, especially if there is a large earnout or equity component, we usually run quite a tight reverse DD on the buyer as well, especially if it's not, let's say, your top 5 US exchanges. Then sometimes the sell side doesn't have best information or knowledge about the actual prospects of the acquiring business. But it's you're in a David versus Goliath position to begin with, and asking a lot of information on Goliath while you're actually trying to work with him or sell to him is a carefully managed process. So you can also see how people struggle with getting perfect information, and it's not the most natural flow of conversations if you put that first. Totally.
Yeah, 100% agree. So I think moving on, a nice segue to the next part. Now, most crypto M&A that we're seeing still follows very traditional off-chain deal structures, like a share sale, for example. From your perspective, what is holding back true on-chain M&A today? And do you think that on-chain execution is the future, or do you think it's more of a niche?
I think for proper on-chain deal structuring and execution, that's still a couple of years out. I think, and I'm not sure whether that's required or that's the best possible way to transact in the future. Ultimately, wherever there are entities involved, and especially now with the downfall or I think return to labs entities versus DAOs, and sort of the end of the DAO era, I almost don't see how it could be. There could be a complete on-chain transaction, right? I think when we think, or when we internally speak about on-chain M&A, which by the way is like probably the hottest topic for us, and really what we think will drive also the next era of M&A in the digital asset space. We think about on-chain organizations, probably your protocols, your ecosystems, large token treasuries, them becoming in a more active buy side, right? We just sold a larger wallet to a protocol. These type of transactions, like this is what excites us, right? There is so many basically M&A ammunition locked up or hidden in basically native token treasuries out there, that if these were actually to be utilized, we would have a full M&A spree, and these could actually be amazing drivers of well required consolidation within these ecosystems to begin with, but then I think also across the different ecosystems, to be creating basically leaders that can also sustain through cycles, right? And I don't think that's true for a large share of the market today, and especially in times that see little excitement for, let's say, long tail tokens or small or subscale protocols. This consolidation could actually help create a more sustainable environment in its totality. So the ability to use tokens and have more on-chain organizations transact, whether that's off-chain, which is most likely going to be the default and status quo for the foreseeable future. And that's what's excites us. Whether ultimately two entirely on-chain organizations inherently not or not carrying any inherent off-chain legal structure, maybe a DAO or so of some sort, and these entities transact entirely on-chain, so that you almost don't have any off-chain trails. That still feels a lot further out than we would currently foresee it.
And it's few and far between, isn't it? Now these days, DAOs that are just truly on-chain and don't have legal wrappers around them.
Exactly.
So I agree with you. It's a lot easier to do a traditional structure, and you can still provide a lot of benefit to token holders, obviously, by doing a traditional deal structure.
Yeah. I mean, the structures ultimately, I don't think the structures is always the a structure. At least in our conversations, also usually comes last, right? I think first there needs to be a commercial understanding of sort of where people want to go, and then once that is found or agreed upon, then obviously all people will work on the best structure to facilitate that, right? And then also, people like yourself come into play and actually advise very carefully and obviously with the expertise and experience on how to best put pen to paper. And to me, the structuring or the transaction processing is more a facilitator than it is a creator.
Yeah.
And so I think, people really need to focus on building great businesses that other people want to own, and within the more token native or crypto native ecosystem, I think we need a bit of maturity and also people that start realizing what potential ammunition they sit on and how much value they can drive for their own protocol ecosystem by really being an active participant in M&A markets.
Yeah, and the buyer really needs to have a clear position on how they're going to grow it and why they're buying it.
Exactly.
Thank you very much. So a few hot takes, future predictions. If we are sitting here this time next year, what, in your opinion, will look meaningfully different in crypto M&A?
Yeah, I was about to bring up the emergence or more significant emergence of token-based M&A. I do think in a lot of our conversations and in a lot of our more recent deals that are not yet announced, the token component in deals is increasing, and it's starting effectively from zero, right? But the amount of people that we're speaking to now that work sort of on a protocol or within an ecosystem that have the ability to also utilize their native token treasury for M&A, I do think we're literally at an inflection point here. And while probably 1 out of 10 deals this year might have seen token involvement on our end, I would say it's going to be more like 50-50 in the next year. And that's, I think, really a buy side that we currently see emerging in front of our eyes, and will create a lot of really token native and crypto native deals in the maybe sort of certainly 2-3 years to come.
Yeah, I'm excited to watch that grow for sure. And what's your top piece of advice for crypto founders looking to exit? Because I'm sure there'll be a lot of founders listening to this.
Yeah, I mean, that's a good question. And look, we have obviously work with a lot of great clients who went through this sell-side journey that could probably better answer this than myself with the experience that they've made. Ultimately, the way I would see it as an advisor is quite clearly say, look, at the end of the day, businesses are bought, not sold, right? So you cannot start a sell-side process or even building a business by thinking, okay, I want to sell this at some point. I need to sell this at some point, right? You actually will create such an amazing business, and you will, run such a great business that other people want to buy, right? And that's the interesting point you need to get to. So I think the best way to prepare for a good sales side process is focusing on your own business. Make this as good as it gets. Have your own clear standalone roadmap, and really focus on getting your business, better by the day. And that's inherently what will make it attractive to the buy side, right? And I wouldn't start the conversation by looking at who is out there, who could I best tailor to. If you have found product market fit, if your market position is differentiated, there's high barriers to entry, you've just been so far ahead of the curve versus some of your competitors or the larger incumbents, then that's what will make you attractive, and that's what will make other people buy. I don't think any successful M&A process is really done with purely the intuition or the appetite to sell for whatever reason, right? And so that's really the greatest deals out there. And that's why I would say to any founder, look, make your business as great as possible. And then people like us at Arita will come and say, look, you have a great business. The timing is great. We know a lot of people that would actually like to own a business and a team like yours. Don't you foresee yourself working as part of a larger umbrella with larger distribution and potentially fast track a multi-year roadmap to a 3 months or 6 months process, right? And those are the situations we love, and those are the situations I think that also work best for founders. So my piece of advice is build a great business. People like us will come knock at your door, and then you will know, okay, the time is right.
That's really good advice. I think a lot of builders in the space sometimes forget that you need to actually solve a real world problem as well. We are moving away from that era, but obviously if you focus on solving a real world problem and, like you say, being the best that you can possibly be, then
and look, the attractiveness of M&A targets also, quite frankly, changes with sentiment, changes with the cycle. I think while last cycle you could have been an absolute great acquisition target, burning millions per month, but having large distribution, large audience, and that could have been attractive in and of itself, right? If your brand was good enough, like maybe money was everywhere and effectively came at zero cost. And so the financial profile was probably secondary in terms of priorities. Now, what we've seen in the last cycle is that profitability and focus on P&L has just shifted to first priority, and then sort of stuff like a brand or distribution would have come second. So it's not meant to say like, look, there's a perfect formula and it will, that's a stagnant sort of list of criteria that people go by, and that what ultimately makes a business great. And I always say that because I have I have the natural tendency as a sort of Blackstone private equity professional to focus too much on numbers and really on percentage points on margins, when that's quite transparently also not the reality for a lot of founders and management teams on the buy side, right? So there's different elements of what makes a business great and how the business would be perceived in the best way possible, and sort of the criteria are not stagnant and change over time, but in essence, trying to build the best version of a business, I do think that holds true across cycles and across industries.
Thank you very much, Karl. Your advice has been invaluable today. It's been an absolute pleasure having you on.
Absolutely not. Thanks, Kathryn, and looking forward to doing a lot more deals together.
For sure.